You're listening to Let's Get Surety. Let me hear your bonding talk with Kat Shamapande.
Hey everyone, it's Kat Shamapande. Thanks for joining us for this episode of Let's Get Surety. And today I have with me my co-host, Mark McCallum, CEO of NASBP. Hey, Mark.
Hey, as always, it's great to be here, Kat.
It's great to have you as my co-host. And today we're going to be talking about the commercial surety market and what's been going on with COVID-19, how that's affected the market. To do that, we've got with us Brian Dahlke. He's Vice President and Co-Director of Crum and Forster's Commercial Business Unit. Brian, thanks so much for joining us today.
Well, thank you. And we appreciate you having us on the call.
We're happy to have you. So COVID-19 has really impacted pretty much everything we do now, it seems like. Can you talk a little bit about how it's affecting or impacting commercial surety economically?
Sure. There's obviously, this is unprecedented times and everyone's crystal ball is fuzzy. But we definitely see a lot of impact across the spectrum countrywide. And there are some historical references we can go back to from 2008, but there's a lot of differences and similarities that happen. And I think, some of the impacts to me is, it is countrywide and you do see the lending and real estate impacted directly by that. And I think also that, those folks that have the strong balance sheets and will be able to weather the storm and leverage and debt is definitely going to crush the businesses that don't have the cash flow necessary to support that.
There's so many different industries that take advantage of commercial surety bonds. Are you seeing different effects in different industries?
Yeah, I mean, obviously, every industry has been impacted. It's a broad swath from tourism, travel, airlines, hotels, hospitalities, bars and restaurants, entertainment, energy, education, and even what the different municipalities and federal government agencies are also impacted. And so I think with all of the various industries that are impacted, you're going to see an impact directly to those that require surety bonds. And I think the stimulus package obviously was a needed lifeline for a number of those businesses. But as with the shutdown, I think it only flattened the initial default curve, and that depending on the situation, that it may have only delayed the inevitable.
So certainly we've seen a number of companies announce that they've filed for bankruptcy, as you said, in a lot of different industries, in terms of auto rentals, retailers, and all the like. You said it may have flattened the curve for some, but what do you see going forward? And as a surety underwriting commercial accounts, what do you think you need to be doing in this kind of environment?
Sure. So I think you're going to see the initial impact be on the smaller transactional book. The folks that are small business oriented, that they're going to be the first to be impacted. They have less sophistication, less resources. When it comes to banking and advisors, whether it's tax or accounting, and some of the abilities to qualify for those PPE loans or loan forgivenesses. And so it's I think you're going to see that initial default rate pick up, especially in those areas such as, for example, you have alcohol tax bonds for different states for bars that are going on. You're going to see those obligees looking for tax revenue that haven't had that payment, maybe start doing some some audits sooner than later to help beef up their financial situations that the municipalities are in. So I think you're going to see initial, again, with the small businesses. And then as time goes on, I think you're going to see, the larger accounts, the more sophisticated clients, that have the ability to tap some different lending options and banking and access. You're going to see them, navigate through this a little better and take a little longer to navigate that scene. And then also at the end of that spectrum, I think you're going to see some M&A activity too on that side of the fence.
Right. So you've mentioned that access to capital is very critical. Are you providing advice to your clients on how they should be managing their bank relationships?
I think everybody is being very proactive of that, especially on the account side. They're having those conversations with their banks, and the banks, they don't want them to default either. So they're going to work with them, I think, as long as they possibly can before pulling the trigger and putting them in that crunch.
Right. And then in terms of the producer piece to this puzzle, how do you think they can be proactive in making sure that their clients are in the best position right now? And what kinds of information do they need to be bringing back to the surety?
Yeah, I think, especially on the account side of the larger accounts, having those conversations of how they're doing. The fiscal year end 2019 numbers, obviously those balance sheets and income statements are going to look drastically different than what has happened since then in the end of
right.
second quarter of this year. So I think managing getting that financial information sooner than later, because we all know that bad news travels slow, to be able to try to make adjustments when necessary. But you have to have the information to know how they're doing currently to do that.
Right. So some would say perhaps that the commercial surety marketplace had been soft up until the recent point in time. Where do you see the commercial surety marketplace going forward? Do you see it tightening as a result of the economic conditions, or what type of things are at play?
Yeah, absolutely. I do think you're going to see a hardening of the market. I think it's going to be driven by specific industries. I think you're seeing the effects of in the energy space, specifically, obviously with oil and gas prices being impacted earlier this year. That definitely had a direct impact to the companies and their balance sheets. And you've seen sureties, readjust their underwriting for the requirements and even pricing. And then I also think you're probably going to see an impact on the reinsurance side and their influences on the underwriting appetite of some of the companies too.
So do you think that will overall affect capacity at some point?
I think it has the potential to impact capacity, but I think it's going to take probably some significant losses before it has an overall impact on capacity. There's so much capacity in the marketplace, especially in the commercial side of the fence.
Right.
And I think it's just going to take a longer time to have a true hardening of the market. But I think it's going to be better than it has been over the past 5 years.
Right.
You had mentioned similarities to 2008. Are there any lessons learned from 2008 that we can take into this?
I think just having that information timely is going to be key. I also think you're understanding that the economy is not going to bounce back quickly. In 2008, we had a long, drawn-out recovery. I think this is going to have a similar length to get back to where we were. And so I think everybody has a little more patience with the recovery instead of thinking that it's going to be better next year. It's going to be better next quarter. I think everybody had a shortened time frame with the recovery, and we all know that this one is dragging on. I think a lot longer than some folks thought initially.
Well, with any set of challenges, sometimes or many times there are opportunities. Brian, what do you see as some opportunities going forward for commercial surety?
I guess the main thing is that we're going to get back to, better standards. We got with the soft market. I think some of those standards have been loosened tremendously, and so I think we're going to see some folks getting back to basics and with regards to capacities offered and especially in some of the tougher spaces.
Right, great. So I know I remember one time receiving a comment that at one point a little while ago it was almost quote a race to the bottom, but you see that changing, fundamentals coming back. Do you think things such as indemnity is going to play a larger role in this space?
I do. I think we're going to, to kind of go back to 2008, when, especially on the contract side, there was a very, the terms and conditions and indemnity packages were very, very loose. And I think the commercial space, has taken that same path. And as we see some folks getting into trouble and the claims and defaults start to happen, I think we're going to, again, see folks taking a look at their overall book and tightening those standards.
And then in terms of your own confidence in certain commercial surety markets, can you single out any of those at this point, or it's kind of just generally right now, everybody's being watchful, getting back to fundamentals?
I think one of the biggest spaces that has seen a race to the bottom, it was in the energy sector, whether that's oil and gas or reclamation. And I think you're going to see those specific classes of business tighten. And then I think you see some regional activity. Each part of the country is going to be impacted differently by this. And so there may be some more regional plays involved with whether that's in some of the real estate and subdivision markets, or even some of the commercial contract sectors.
Yeah, that's a great point about regional differences. Do you think there are any along those same lines? Is it worth kind of going over some of the regions and what you think may be either problematic or opportunistic in each region?
Well, you definitely have oil in Texas. Texas has always been its own little economy down there. When oil prices are good, that's always a main driver down there.
Right.
I think you're going to see, if oil prices continue to be at a low, it's going to take longer for them to recover, which has a major impact on the overall economy down there.
Yeah.
I think, when you focus on maybe some of the other areas that are tourist driven, whether that's Florida or whether that's, Nevada, different places that are impacted or directly impacted by the tourism dollars, you're going to have a longer lag until you have people have a much higher confidence in getting back out there and traveling again.
Right.
So, and then you have the places that have more government involvement. Whether it's the Mid-Atlantic, I think you're going to they tend to fare better in the storms just because they have those federal fiscal dollars being rolled out consistently. So I think it just depends on where it's at and what the major economic drivers are in those specific areas, and how soon those specific industries come back.
Right.
You talked a little bit about the short and long-term influences and how it was going to influence transactional versus large account commercial differently. Can you speak to that a little bit more and just give me some more information on the differences you see there? And do you see any lessons learned from 2008 regard to that as well?
Well, I think, with any downturn, there's always opportunity on the other side. And so, how confident people are to go out on their own, to start their own thing in their own business is going to really impact, the small businesses. But, I saw a statistic the other day that said that 25% of all small businesses and between 40 and 50% of all restaurants won't make it through the pandemic. And so I think that's going to have an impact on folks being bold to try and go out and do different things and do that, especially on the smaller side. I think that you're going to see, again, like I mentioned before, I think large commercial, you're going to have those M&A activities. You're going to see some bargain basement pricing on the cost to capitalize on some of these entities that have a good market position, but maybe their balance sheet was leveraged to the point where they just couldn't maintain it. And so people are picking it up for a song and a dance.
So if you wanted to give advice to producers who are looking to help their clients right now, and to either achieve commercial surety credit or increase that, what advice would you give them?
I think it goes back to basics, and cash is king, and leverage is painful, but that sometimes you need to have that cushion, whether it's a banking relationship, something to get you through the bad times. Sometimes understanding, where you're at and the true cost to run your business. Does it make sense? Can you make it? Are you going to be able to make it? What's your cash burn? Those types of things I think are critical to ask folks to make sure they understand where they're at, what's presented in front of them, and the possibilities and that they're going to make it through this. It's a hard conversation to have. I mean, I remember back in 2008, having conversations with some folks, and these are companies that have been through multiple recessions, and to have some of the older owners knew that they just couldn't do this. They just knew they weren't going to make it. They knew what the true costs were, and they had to. They ended up shutting their business down because they knew what it cost them to shut it down, but they knew that they couldn't continue forking out the money month after month with the uncertainty on the other side.
Right. Those certainly do sound like hard conversations, but necessary ones in the end.
And I know you mentioned at the beginning, all of our crystal balls are a little tarnished, or we can't see clearly. But do you have any predictions you'd want to hazard?
Early on, I saw an article that spoke to what was going on, and I thought it made an excellent point when it said that there was not going to be any major changes until the consumer confidence increases significantly, and it was not going to happen until there was either a meaningful, effective treatment or the vaccine was in play. People weren't going to go back to doing what they were doing until they were certain that if they did catch it, that they weren't going to die from it. And so I think we've been talking, the news, the media always talks about the fact that, the vaccine is the end of the year. I really think we're going to be looking into second quarter of 2021, maybe third quarter of 2021, before we see a swing back to some sort of normalcy.
Yeah.
I really believe that the stimulus package just has, as I mentioned before, flattened the curve. I think it's just kind of kicked the can down the road a little while, and people are hanging on, and they're going to continue to hang on because they have faith that they can make it through this. But sometimes it's not going to play out the way they want, and this economy, the longer this pandemic impacts the economy, the deeper the recession is going to be, and the longer time it's going to take to fully recover.
Right. Which sounds like a great argument for returning to fundamentals, doesn't it?
The market, the surety market is very cyclical. It always has been, and it takes these major events to kind of take a step back and say this is what we should have been doing all along. But the commercial space, even during the 2008 recession, wasn't impacted as heavily as the contract side. And so, people, I think, thought that it was somewhat bulletproof, and that you didn't need the same fundamentals as you did maybe as you would on the contract side. And I think we're seeing the fact that you can have an event that impacts the overall economy substantially enough to not just be one sector or one industry.
Right.
Well, Brian, thanks so much for taking some time with us today just to talk through the commercial surety market during these unprecedented and really uncertain times. If I did want to mention, if anyone's looking for some more information around COVID-19, you can check out NASBP's COVID-19 resource page. You can find that on NASBP's homepage, www.nasbp.org. Brian, if anyone wants more information from Crum and Forster, is there anywhere they should go to look for that?
You're welcome to visit our website at fins.com, or you're welcome to reach out to myself or anyone else on the staff.
Terrific. Well, thanks so much for joining us, and hopefully we'll get to talk to you again sometime. Thanks, Brian.
Thank you, Brian.
Thanks, Kat. Thanks, Mark. Appreciate the time.
You've been listening to Let's Get Surety, brought to you by the National Association of Surety Bond Producers. For more information about the NASBP and its members, visit nasbp.org.